Hi, everybody. This is Jim Myrick with the Myrick Estates team at Keller Williams Bay Area Estates in Los Gatos. And I am going to present to you the November 2021 Santa Clara County real estate market update. Let's start with the overview. Current listings that have been put on the market for this last month is down about 10% year over year compared to this same time last year. Closed sales are up 1%, even though the listings are down. So, which is kind of interesting. The market continues. It's just a little more difficult to get people in properties, but it's still continuing to be at 1%. Average days on market are down 17 days. Those days I think are manufactured a little bit because a lot of agents and a lot of sellers, what they'll do is they'll hold off on offers, which it doesn't make that number very natural. So it isn't like that's truly it represents the demand. A lot of these houses you can sell the next day. It's just that they're doing the best for their sellers and expose it to as many people as possible. And normally they like to keep it on the market anywhere between 7 to 10 days so people get a good chance of taking a look at the property. But those days are down 15%, even with that little bit of a unnatural manufacturing of those days on market. Now, these three bottom numbers usually are trail pretty much to each other. We like to keep an eye on them to kind of see what are the trends. As you notice, the average price per square foot went up 17%, but the median sales price went up 16%. Well, if the same type of house is selling, it doesn't make logical sense why it's a little bit less than the median sales price. However, what it is saying is that smaller houses are getting a little bit more money per square foot. It's not much. It's tracking pretty close to each other. But that's normally what's happening is it's just the price per square footage is actually higher, obviously than the median sales price. And total volume is the same thing at 15%. I would say if you look at these numbers and it has some kind of decimals, they're probably very, very close to each other. And again, the 17 to 15%, it's a pretty close tracking. This is your median sales price compared to year over year. If you look at November all the way to the right, you'll see that we are 1.42 is our median sales price compared to last year at 1,250, 16%. A little about a percent, quarter, percent, a third every single month is what it climbs out. But as you notice, the median sales price, when you look at it, it's not a straight shot. These latter part of the year is kind of a confusing year. There's things that are happening. Kids are going back to school. There's holidays. There's all kinds of things like that are affecting the ability. It's not so much the pricing of it, but just the turnover of properties. And right now, November, again, this is kind of the last hurrah. People are trying to get in the property before the end of the year. And with the inventory down, it's making it just a little bit more challenging. Here's a median sales price starting from 2018. As you can see, this created it's kind of a roller coaster ride to get up there, but there is a theme where it continues to build, and we've had a very good run here since SIP. People are just re-identifying what properties mean to them, and what type of properties they want to live in, and that's just created some activity, through their soul searching of how they want to live. So SIP was kind of an interesting year. This activity right here, as you can see, this dropped way down because mainly, we knew things were kind of stirring up right here. We didn't know what was going on. People are going, when there's uncertainty, not everyone likes to move on things. So we found that was the beginning of this quarter was just a little light because of just uncertainty. This is the new listings. As you can see, at the beginning of the year or the middle of the year, we were really feeling pretty, oh my God, this is great. We have more houses to sell. And, everyone thinks that real estate agents want to see that this kind of high demand market, but we really don't, because we can't sell as many houses because, we have so many buyers that go home disappointed. And when we have more to sell, more product, then we have more to sell. And that's what we're here to do. But those dreams of higher inventory was soon shattered about September, and where we kind of met pretty close to the same type of inventory. As you can see, in October and November, it just plummeted down. We're down 10% from this same time last year with brand new listings on the market. Contracts signed. This is a great market to look at. These are actually properties that are pending currently. So you're wondering if this is going to continue on. Well, it's at least going to continue on for another month, because this right here shows that we are down 4% on contracts signed, which is not a whole heck of a lot. And this is tracking a lot of the inventory that we're doing as well. So people still want houses, and these houses are currently pending, and they're going to be closed sales, and then report in December's numbers. Closed sales here just shows, again, we had a higher, look, this is why real estate agents like higher inventory. This is the time where the inventory was higher. And as soon as the inventory starts going low, it starts dropping down and we have less sales, right? And now we're about 1% off right now. So it's just a little tougher to get a house, but we're doing it. We're making it happen. We're getting, it's only off 1% of the actual closed sales, even though the inventory, as you saw, it's down. I think the last one was 10%. Average days on market, we already talked a little bit about that. It's down 17 from 20, and those markets are kind of manufactured just because of the unnatural of waiting to take offers. Now, this is an interesting one, luxury home listings. These next two slides are very interesting because the 2021, as you can see, we were kind of tracking just a little bit below. It's not a very big number, so this gap, if you look at that gap's only like what only about 18 units, right? So the thing is that when you're looking at this, these numbers aren't so vast here, but it does 42% down. It's 121. That is a vast number. That's quite a big span between the inventory of listings, of luxury listings at $3 million, which, pretty soon as the market continues to rise, we're going to probably have to re-identify what a luxury listing is. And now look at this right here, luxury contracts signed. Okay, so that is actually up 50% to 52%. How do you do that? How do you go from down 42% and then you're up 52% in actual deals in escrow right now? Well, the ones that have been, some of the luxury properties have been sitting there that people say, oh, it's too much, or, I'm just going to wait or whatever like that. They say, listen, but by the time they've had these houses on the market for a little while, they've caught up to the pricing and I think they're ready to go and people are starting to buy them. So this is kind of an interesting part of the market where people are just re-identifying what type of property they want. And also, I think they want to stay in their properties. So a lot of people who are trying to sell their big properties and go into another one, then smaller ones, some of them are just kind of holding back a little bit and saying, okay, well, I'm going to see how this whole pandemic thing shakes out. And I'll go ahead and make a move at a later date. So that makes the current inventory even that much more valuable. So anyway, I hope this helped out, kind of give a little bit of a feel for what's going on in the market. I have lots of different tools that we're big into numbers, and we like to come at this from a very educated standpoint, other than just buying houses, like just getting all wrapped up in the excitement. Just be very, very logical thinking about it. We have several different things you can tools. We have quarterly reports. I'll show you a little bit on our quarterly reports here. You just go to our website, and as you'll myrickestatesteam.com, scroll all the way down to the bottom, and you'll see our quarterly reports at the bottom with full reports down below. And all you do is you go in here, and if you want to see kind of what the trends are, I like quarterly trends because the 12-week market is a lot better. You can see kind of where things are going and where they came from, other than just doing just the monthly. We just do monthly because people want to know right now what's going on. Here, as you see, another one I wanted to really show everyone here is this kind of a cryptic little. Let me see if I can find this. This is a cryptic chart right here, but this is the sales price to list price ratios. And if I just show the tabulature data, this is for Santa Clara County. And if you notice, this is like if 104% was in January. And look at this, we just topped out the year at 110.1%, meaning if something is on the market for $2 million, okay, then what happens is you're gonna see 10% over that. You're probably at 2.25 is the amount you're gonna be paying for that. So this is just on average. Now you want to look at your specific area, but this is a good number to know what you're stepping into and what people, if you're a seller, that people are willing to give you 10% above ask price. So when you list a house, you should keep that in mind. And also sellers, when you're stepping in, you should know that this is kind of the average what's happening. Now, I don't ever suggest you do that blindly and just do it by the rule of thumb. You need to dig into it. Some people price it higher and closer to the sales price, and some people price it low just to get a bunch of people in there. And if you just go by the 10% thing, you're going to cheat yourself out of too much money, or you don't even get the house at all because you're stepping into an environment that is not what you think it is. But so just understand what the value of the property is. Understand that people are going to probably go at 10% higher than that. That's a really good stat to have. So anyway, if you have any questions, just please let us know. Check out our website here with all the stats of what's going on. If you want to search for properties, we have certain areas, and a lot of the areas we have specific stats on that one little area. Los Gatos, Almaden, Willow Glens are areas. We have Santa Clara, downtown San Jose, and also those of you who want to go get your surfing in, we do support Aptos, Santa Cruz, and Carmel, Pacific Grove areas, and as well as Pebble Beach. So if you have any questions on that, please let us know, and we would be honored to serve you. Take care.